Good morning. I'm Michael Toporek, Chief Executive Officer of Soluna Holdings. Thank you so much for joining me this morning for our November 2021 Flash Report. As usual, I begin with a legal preamble that in the next several pages describes that our discussion here is completely qualified by those legal disclosures. Our goal is to share with you some of our strategic thinking and financial analysis that we're using to guide the growth of our business. The discussion here is in line with our principles of being accountable and transparent with shareholders. And we clearly operate in a hyper-dynamic economic environment. That's a fancy way of saying that things change quickly. What we're telling you here is based on our estimates and assumptions which are our best guess. We reserve the right to revise our point of view based on new information and changes in the business environment. But despite an uncertain dynamic environment, we have to plan and make operating and investment decisions. This presentation lays some of that out for your review. This is the first slide, the second, the third. As is customary for our flash updates, we usually like to begin with a quick reiteration of our key operating principles. Accountability and transparency are critical to the way we run our business and to the way we communicate with you. Private equity firm that I help to manage owns about 30% of the company, and we're very focused on high velocity execution, and you'll find that the decisions we make target return on invested capital and extremely disciplined from that perspective. I think especially as we roll into next year, we talk about a description of a long-term strategy beyond crypto. You're going to begin to see evidence of that and very clearly how we separate ourselves from the rest of our competitors. One of the things that I've mentioned to you before is that we're really quite different than our competitors. We aren't running around chasing PPAs. We are problem solvers for the renewable energy sector. We buy curtailed energy from renewable power plants and really convert it to clean, low-cost global computing. For example, one of those applications is crypto mining, but beyond that is something we call batch-oriented computing. The market opportunity for what we're calling batchable computing is significant. There's clearly the market in digital currencies, but there's also a market in pharmaceutical research, graphics and video processing and rendering, and scientific research in university environments, for example, all over the world. For today's agenda, as is again customary for the monthly updates, I'll give you a quick business update and then dive into the November results in detail. I'd like to pause here for a moment and let everybody know that this is an aerial view of our Sophie facility that we're very proud of and that we've built out over the last several months. The message that I would like to leave you with in this presentation is that we are scaling. We are scaling at an accelerated rate this month and over the next several months, and we expect to track to reach 1 exahash by the end of the first quarter next year. So some key milestones for November. We expect to hit our 722 petahash target for the end of Q4, plus or minus 30 days. We're currently at 623 petahash on December 9th, but we're very carefully managing supply chain issues, which I'll address a little later. But we are confident that we're going to hit that. We also expect to beat our target that we put out early this year, of 912 petahash by the end of Q1 2022. We expect to break 1 exahash by the end of Q1 2022. We also expect to have Sophie completely scaled up to 25 megawatts and fully energized by December 31. And we're continuing to complete the ramp up and testing of our data center infrastructure at Sophie. Our hash rate continues to ramp to 1 exahash. Let's for a moment take a look at where we are on December 9th, 2021. We have 286 petahash in our hosting JV. Our commitment to get to 300 petahash is nearly fulfilled. We have 337 petahash in our proprietary mining business. We expect that between December 9th and the end of the first quarter, our proprietary mining business will increase by over 108%. It will increase by 363 additional petahash we expect to bring online. That will drive accelerated increases in our financial results on revenue and contribution margin. As of November, just to pull out some key data, our cash contribution run rate is $23.3 million. In November, we delivered over $2.6 million to the top line, over $1.9 million to cash contribution margin, and if you simply annualize that, you get 31 in revenue, 23 million in cash contribution margin. So what does this look like for financial results? As I mentioned, they will significantly accelerate. So for example, in November, we have a cash contribution of 1.943 million. We would expect that when we hit 1 exahash, that would move to 3.358 million. And notice the bulk of the increase is in the proprietary mining business. Our cash contribution margin for November grew by 35%. As I mentioned, we are scaling and scaling rapidly. What I'd like to do is, let's do some calculations on our proprietary mining business. At 700 petahash, our estimate is that our proprietary mining business could have a yearly revenue run rate of about $54 million. Let's walk through how we get there. We begin with what we currently have on December 9th at 337 petahash. That produced an average daily revenue of about $89,000. And I think plus or minus the Bitcoin price was around $50,000 at the time. But let's apply a 20% discount to that, giving us a revenue of $72,000. So if we work our way down, estimated revenue at 700 petahash is $149,000. 30 days in a month gives us 4.461 million per month in estimated revenue. Annualize that is over $53 million. And at 700 petahash, our estimate of proprietary mining annual cash contribution could easily scale to $37 million. So, using information from the previous slide, monthly revenue 4.461 million. Our cash contribution margin was running about 76%. Let's give that a haircut and call it 70%. So our monthly cash contribution margin from proprietary mining is about 3.1 million. Now you take a look at, on an annual basis, we talked about 53 million from the previous slide. Again, drop the cash contribution margin to 70%. That gives us $37 million approximately in cash contribution margin that we could be hitting by the end of the first quarter on an annualized run rate basis. We do need to add in the results from the hosting joint venture. So you'll recognize on this page the proprietary mining revenue, both monthly and yearly. You'll recognize the contribution numbers, both monthly and yearly, adding in the hosting revenue and profit. Altogether, that adds up to over $40 million in an annualized contribution margin run rate. Just setting that out for you graphically here, we scaled dramatically from October to November. Between November and the end of March, we expect that accelerated rate of revenue and contribution margin increase to result in roughly a $40 million run rate for cash contribution margin. I'd like to take a moment to comment on the current business environment and talk about how when we discuss supply chain and logistics challenges, what that means for us other than the obvious of making sure that our computing resources show up on time, making sure that we order our electrical infrastructure for our future projects, in sufficient time so that we can hit our schedule for next year. Other than all those easy things, the difficult things are when there are small things like power cords, like splitters that you order and don't think about and assume they're going to show up, but all of a sudden orders are canceled. So what we and others are doing is we keep an inventory of certain what I call critical low-cost items, but if you don't have, really prevent you from scaling. That's become standard operating procedure for us. Also, we're very fortunate that Sophie is continuing to ramp nicely, and we expect it to be, as I mentioned earlier, at the full plus or minus 25 megawatts by the end of the month. And as part of the normal facility shakeout, we did catch a malfunctioning transformer. As part of the shakeout, we shut down the facility for a few days, re-inspected all the transformers to make sure there weren't issues with them, and then brought everything back up, and we continued to ramp the facility. As part of a normal facility shakeout, and as I mentioned before, when we had to rearrange some things in terms of infrastructure, these are normal bumps in the road as you scale up and shake down a facility. It did cost us between $100,000 and $200,000 in revenue for the month, but that's par for the course, and by the end of December, I would expect the shakeout to be complete. Just a quick update on the facilities. TNT, now known as Edith, has performed well for us. Sophie is doing nicely as the team continues to scale it, and they continue to have to manage supply chain issues there. And Marie, we have actually made some progress with the local utility, and I expect that to continue to move very slowly, but to continue to move to a close. Some key communications dates. Our next monthly flash update is going to be released before the open on January 17th, not on the 10th. The reason being that we have to make sure every number is ticked and tied carefully because those numbers need to be consistent with our 10K, and I'd like to leave our accountants and the rest of our team time to really work through all of the items and make sure that what we release on the 17th will be consistent with what we want to put into the 10K. Also, I did commit to putting out an earnings power illustration, which puts out our key operational milestones for next year and detailed financial analysis of what that, if we hit those milestones, what the earnings power can be from hitting those milestones. I expect that to be put out on January 19th in the morning, and I look forward to sharing with you all of that information. I'd like to wish our regular listeners and shareholders a great holiday season. We're really looking forward to next year. We have transformed our company this year. Next year is all about growth acceleration and driving value to common shareholders. I'd also like to take a moment to thank all the people at Soluna that have made this year possible. We know it's sometimes come at a great personal cost for all of you and your families. We're very grateful. We also want to thank and recognize the many service providers that made our accomplishments in 2021 possible. They include people like construction management teams, IT professionals, legal and accounting teams. Let's jump into the detailed November 2021 flash information. This is our usual consolidated presentation of results. You'll notice the numbers are quite consistent with what I pulled out to the front. Here's the 1.943 cash contribution margin for our November 2021 numbers with the 2.632 in revenue. Some of our operating metrics consolidated. You'll notice that TNT continues to be a solid performer for us in terms of cash contribution margin dollars. We're very pleased. Our team at Sophie continues to ramp up aggressively, and as they do, clearly revenue and contribution margins dollars will follow, as you can see on this slide. At Marie, formerly known as Python, again, a solid month. And you'll see the hosting revenue and profit continues to scale up as we finish meeting our commitment to our hosting JV partner. And this is our operating metrics on Marie. I'd like to thank you for joining me. And as usual, if you have any questions, please feel free to contact Kieran at PCG for Investor Relations or email us directly. Thank you so much.